Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. This is the monthly Movers and Shakers show, the show where we break down what the big trends are within the indices, FX and commodities space and try and tell you whether I think that it's going to continue or whether that move has been overextended and that we're going to reverse in the opposite direction. So plenty of volatility playing out over the course of May. Let's just see whether that's going to continue. So kicking off with the indices space, and as we can see here, all of the indices that I mentioned have managed to gain ground over the course of May. A great month for equity markets, in particular the Nasdaq, and that comes as no surprise really. First and foremost, earnings from the Mag 7 names have been very impressive. The most recent came last week where we saw the Nvidia earnings. It bumped up 6% at the open. Came back a little bit since then at the back end of that session, but ultimately the theme around the outperformance of tech is back in play. Now, part of it also is a theme around the resurgence of the US as a place to store your money. Of course, there has been a lot of talk over recent weeks and months around the so-called end of US exceptionalism. And US exceptionalism is essentially around the idea that it's the one place you want to put your money, right? That's where the biggest companies are. That's where the biggest markets are, the biggest valuation, the most liquidity, the most trustworthy historical performance in terms of equity markets. And so that's why the biggest names take in the biggest amount of money in the US, because people around the world want to park their money in these indices and they're heavily weighted towards the biggest names. So that means when people get back into US stocks as a whole, they're going to be getting back into the biggest names, disproportionately so. So strong earnings, the resurgence of US equities and the US as a positive theme because of the fact that Donald Trump has pushed back many of these reciprocal tariffs, most recently the Chinese tariffs. That really has provided a boost for equities in the US. And by proxy, if you're seeing strength in terms of the big tech names, you're going to see outperformance for the Nasdaq because it's got very heavy weighting in terms of those big tech names. Now, on the flip side, we've got the Swiss 20, which certainly has been floundering at the bottom there, 1% gain over the course of the month. Not necessarily something that I cover all too much, I will say that much, but certainly gives us an opportunity to look at a chart that we're not necessarily that used to talking about. So let's look at the charts first and foremost. So here we go. This is the chart for the Nasdaq. And so as we can see here on the weekly time frame that we've been sort of clambering our way back up, recovering those initial losses, not all necessarily losses associated with Liberation Day, as Donald Trump would call it, because that happened back here, right? So we did see a collapse, but it was feeding off of the losses that we'd already seen around through February and March. Of course, when you're looking at the trend that's in play here, it is a very positive one. So that little sell-off, and when I say little, it was a very strong sell-off, but you can see here it's a flash in the pan soon enough. You can see that month. Within 1 month, we see a massive sell-off, but then recovery and end in the green. That really provided the basis for us to think, well, there's a good chance that we follow up from here and start to move higher. And that's exactly what we have done. Another strong candle for the month of May. But people feeling very much like they want to see a little bit greater clarity. There's question marks over whether this is going to have legs to be able to push into record highs and continue on this current vein. So the daily time frame, as we can see here, we've got this clear-cut sort of pattern of what was sort of very strong moves higher. And now we're sort of seeing a little bit of momentum coming out of it. So let's just point to all of the swing lows on the way up on this recovery. We'll point to what was the prior high, or still is the prior high. And so as we can see here, we're sort of climbing, but these initial moves and sort of very shallow pullbacks, some of them, you know, very fleeting pullbacks indeed within a single day, and now starting to give way to more protracted pullbacks. The high is only marginally above the prior high. So you can see that momentum is sort of losing a little bit of traction, so to speak. In my mind, there is a justification for a bit of a pullback. And certainly we've kicked off this month with talk of doubling the aluminium and steel tariffs to 50%. Donald Trump essentially saying that the Chinese aren't holding up their end of the bargain when it comes to the rare earth materials. So things are starting to turn a little bit sour. And certainly, given the fact that we've recovered quite as much as we have, I think if we break the 20669, it does point towards this phase being over, and instead we come into a retracement phase. It's difficult to know exactly how deep that retracement phase would be, so it's a case of playing it by ear and following the patterns when it comes to the chart itself. But certainly, as things stand, the trend still is in play over the near term. So let's look at the Fibonacci level and see exactly how things are stacking up. We can see here that we've come into the 61.8 thus far. So the 21101 level represents your near-term support. You can see it provided support on the way up, support on the way down. So that's your near-term support. Below that, 20936. But the key level, like I said, is 20669. If we break that, then it starts to look a little bit more bearish over the near term. But until that happens, this pullback, whilst we are seeing a little bit of a loss of momentum, so to speak, the near-term trend still plays out, and therefore there's a good chance we do see the bulls coming back into play once again soon enough. Then when we're talking about that Swiss 20 chart, we can see from a long-term perspective, this isn't necessarily stacking up in the same way as, say, the likes of the Nasdaq. Let's put that on a weekly time frame, and you can see here there's a very clear-cut uptrend here, whereas the Swissy, we can see here the Swiss chart, you see these pretty significant pullbacks, then a bull run, pullback, then sort of a lot of consolidation, then a recovery. We see a big rally, sharp sell-off, we're recovering. So we do see some pretty significant swings for this market. And whilst the long-term trend is, of course, up, it's not necessarily as convincing as the US markets. You can see here that at the moment we're sort of floundering a bit in the same way as the US, but we certainly haven't recovered to any degree like the Nasdaq. So there is a chance, once again, that we start to see indices rolling over. And ultimately, if the Nasdaq breaks low, we're probably going to see the Swissy do the same. But given the fact that we've seen big swings for this market, a breakthrough 12019 means we could see a decent pullback once again here for the Switzerland 20. Next up, let's look at the outlook for the FX market. So the outperformer has come in the form of the British pound, up 1.33% over the course of the month against a basket of currencies. And the US dollar is the underperformer, and you can see here it's basically flat on the month. Now, the weakness of the US dollar has been a big theme since Donald Trump's come into power. And whilst he essentially says he wants a strong dollar, what he really wants is for the dollar to remain the reserve currency of the world. He doesn't want a strong dollar. And in actual fact, the weak dollar serves his purposes very well. So that is an ongoing trend, and the rest of the pack really just sort of trade against the US dollar. If you notice this, every month, the dollar's either at the top or the bottom of the pack. And so this time around, it's the turn of the pound to be the outperformer. That comes after a month where we saw a raft of data, by and large, better than expected. So let me just quickly take you through that. So first and foremost, we saw claimant count change. That came in better than expected. We saw a stronger than expected average hourly earnings or average earnings index. So that's inflationary. We saw GDP coming in better than expected. We saw inflation, the CPI number, coming in hot at 3.5%. We saw the services PMI number coming in better than expected. And then the retail sales number coming in better than expected. So the economy in the UK appears to be doing better than many expected, but also inflation pressures are certainly in play here, with the CPI popping, the wage figure coming in higher. So that sort of takes some of the easing off the table when it comes to the outlook for the Bank of England. And that's kind of why we're seeing that outperformance. It's difficult to know that that is going to be a new trajectory where, the new trend is every month that the UK has stronger data. But nonetheless, it does sort of point us in the direction of a chart that has, if we look at this chart for cable, has been climbing up towards some pretty key levels. So first and foremost, you can see on the monthly time frame, the trend is bearish here. But we're set within a pattern here where we've got 1, 2, 3, 4, 5 consecutive months. Bear in mind, we're only just into the 5th. So 4 consecutive months confirmed of very strong gains that have taken us into the highest level seen since the beginning of 2022. Now, you can see from this wider perspective, we've got this inside trend line. So you've got 1, 2, 3 levels of support, and then 1, 2, and potentially a third area of resistance. So that does point towards a possibility that we come into some resistance up ahead, but it's still a decent way away from where we are at the moment. So the question mark is this trend still playing out? That's essentially the 2025 trend. And it is. And you can see the pullback that's happened of late gives us this sort of sell-off, this retracement, the rally, the higher low. So then the rally up through that swing high and then through the price swing high that we have here all points towards a high likeliness that we're going to be back on that bullish trend once again. So if we break through the 134454, which essentially is this near-term swing low, that's when it points towards a potential for another wider retracement coming into play. But until then, we have a very clear uptrend that's been playing out over the course of 2025. And that looks to be playing out once again towards the upside. You're looking at this 136 as the near-term resistance. And like I said, when we're looking at that wider trend line resistance, it's not necessarily an exact science because, of course, it just depends how you draw it. But you would say it's somewhere around your sort of 1375, let's say. I mean, obviously, it's dynamic. So the longer it takes to get to it, the lower that level will be. But nonetheless, we still have got some space towards the upside before we get into that level. And really, it's a case of just following the trend. And the trend does remain very much a bullish one for the time being when it comes to cable. And then finally, let's take a look at here we go, at the commodity space. So commodities, you can see outperformance for platinum, interestingly enough. And the underperformance comes from gold, which is one of mine and other people's favorite assets to be following. Now, key to that is the fact that whilst we still do have these concerns around debt over in the US, and that has pushed many people towards non-fiat assets, that when it comes to gold doesn't necessarily play out perfectly when you're also seeing equity markets posting such an incredible month. That means that haven demand really dries up, and we've seen that for gold. Like you can see, it's basically flat. But in a way, you could say, well, look, that gold is flat over a period of time where haven demand is drying up because risk assets are doing very well. You know, that means that it's set up very well to outperform at a period of time where you see the jitters come back into play. And like we've said with the equity markets, there is a good chance that given that many of them feel a little bit overextended, if we start to see some bad news creeping into play, then you could see gold really coming back into strength. The flip side is platinum. Now it's another precious metal. Platinum's an interesting one because that alongside palladium are utilized when it comes to catalytic converters. And whilst we are, of course, seeing a move away from sort of fossil fuel cars and more towards EVs, Donald Trump arguably isn't really that guy, right? He's probably quite happy for people to drive whatever, as long as they're made in the US. So that sort of slows down that move towards or away from catalytic converters, which provides a bit of a boost for platinum. Now, let's just look at the chart and see exactly how things shape up, really. I mean, look, ultimately what we're looking at here, if we look at the chart for platinum, is that on the weekly time frame, by and large, it doesn't really go anywhere. You can see over the last like 3 and a bit years, once we get to the levels that we have just recently hit, sort of 1100 kind of area, it doesn't last. The time and time again, that's been the beginning of the sell-off phase. And whilst we do see decent sized swings, you know, sort of 850 up to 1100, you know, we don't really go anywhere. And so unless we break towards the upside and start taking out some of these levels that we've got here and here and here, you know, do we start breaking through those levels or do we just do more of the same? I think there's a good chance we just do more of the same, quite frankly. And you can see there is a question mark around this trend line. So we have broken through trend line resistance, but we need to be taking out the horizontal levels and look at what's happening as we kickstart this new period. So you can see we ended the month on the back foot. We're now continuing in that vein. So there's a good chance that we do see this selling off in quite a meaningful manner. You can see each time in the past where you've seen it selling off, it's been pretty sharp declines at the beginning of those sell-offs, right? It's just definitely doesn't mess around when it comes to these sell-off phases. So you can see here. So we're seeing similar kind of thing playing out at the moment here for palladium. I think there's a good chance that we do see it weaken. Now, if we look at the ratio between palladium and gold, this is really interesting, right? What we're seeing here is the retracement phase coming into play. Sorry, platinum against gold. The retracement phase that's essentially lasted May, where gold hasn't really gone anywhere and platinum's done well, but set within a long-term trend that really points towards only one of them being the kind of area you want to be long, right? So gold, yeah, that looks great. But platinum, as you can see in this ratio between platinum and gold, I wouldn't necessarily be filling my boots on platinum longs anytime soon. And instead, given the fact that we've rallied up into this zone once again, and now we're starting to reverse in a sharp manner, I wouldn't be surprised to see this swiftly decline. And platinum, in a month's time, when we're talking about movers and shakers, could quite easily be the underperformer in the commodity space next time around. And then gold. Gold is one of my favorites, and for good reason. I mean, it's done incredibly well. And if you look at sort of historical instances of bull markets within gold, it's easy to look at that and say, oh, this has got to come to an end. But ultimately, this is, if we go on sort of log scale, this is just what could be the infancy of a move. I mean, you look at trends that we've seen in the past. Look at this trend, right? So your low here sort of kicks off after consolidation. You have retracement, consolidation. The beginning of this trend really kicks off in 2001. The end of it really happens in 2011. So it's a decade-long uptrend that we've got in play there. Now, we saw this consolidation. We rallied here for a couple of years. We've then got another consolidation period for a couple of years. And now we've sort of pushed high. I mean, even if you want to take the low from here, you're looking at sort of back end of 2022. So it's been 2 to 3 years. And, in my mind, I think that you play the trend until it comes to an end. And the one thing that I am confident in is that the US isn't somehow going to bring its debt under control. They're not actually going to decrease the amount of debt that they've got. Maybe they kind of put it under control to an extent, but ultimately yields the way that they are at the moment means that the debt's going to grow even if they don't take on additional spending, just because they need to make cuts, really. And what we're seeing here in terms of this recent trend is that, we saw that very strong move towards the upside. Then we saw sort of a deep pullback here, 61.8 retracement, sharp rally. We pulled back, but we didn't really come into anything notable. It was maybe like 50% retracement, then lower high. So you've got A, B, C, which is part of Elliott wave theory. It comes into this deep retracement below the 61.8. You can see that ultimately that candle ended up in the green. So that pullback into that deep retracement zone. Then we rally into the 76.4, which is 3363. We've pulled back temporarily, and now we're pushing higher as we kick off the new month. So whilst we've seen a lot of chop over the course of May, and it's not really gone anywhere, there is structure to this. And essentially, it's a very clear uptrend in play. We've come into this wider retracement in a 3-stage move into the deep retracement. We're now back at this resistance level. If we break through this sort of 3360 zone, then that points towards a high likeliness that we also break the 3438. And if that breaks, then that ABC thing is done. And therefore, the record highs are awaiting us. So this move through 3360, in my mind, paves the way for a higher probability of 3438 and 3500 getting taken out, and a continuation of that bullish trend here for gold. So whilst it's at the bottom of the pack, I wouldn't necessarily think that it's going to be there all that long. And I think, like I said, there's a good chance here in a month's time, what's going to be the outperformer, what's going to be the underperformer in the commodity space, they could quite easily switch places between platinum and gold. I hope that's been useful. Make sure to like, subscribe, follow for more content like this. My name is Josh Mahony, Chief Market Analyst. Have a great day and good luck trading. Thank you.